Every great story begins the scene with the snake, and that is the 2025 outlook for Mish Schneider with Market Gauge. Let's bring her in and let's have her talk about what her 2025 outlook is. Mish, how are you? Good to see you.
Great to see you, Blake, and what an auspicious time here right before the holiday to get together. I really appreciate you asking me on.
You know what? It was my pleasure. And based on the market reactions we've seen over the last couple of trading sessions and the reversal following the Fed, I think it's very fitting that we talk about what your ideas are going into next year because markets look a little vulnerable at this point. So let me, before we get into your outlook, let me ask you what your take is up to this point. How do you feel about the markets, especially following the Fed from last week?
Well, I think that one of the most interesting aspects of the market was the feverish euphoria that was happening into December and all of the statisticians that came out talking about this blast off end of year rally that was going to happen. And they used all the different statistics, election year, December in general, Santa rally. And of course, we saw the opposite happen last week and they had that massive drop the one day with somewhat of a recuperation, but as we're beginning the week, it's not necessarily blowing anybody's doors off. So it shows you a couple of things. Is herd mentality can shift very quickly. And you really, I think the most important thing, and this is something we've talked about like through the years, is you have to have some kind of an idea of what your risk parameters are and your timing mechanism in terms of, is this a really great time to start piling in when the market's so frothy? So I wasn't surprised, really. I was a little bit taken aback at how intense the sell-off was after the Fed, but it really basically set up what I'd already thought about for 2025. So we can get into that a little bit.
Yeah, and I'd love to get into that because I actually have a couple of questions reading through, some of the main topics of your outlook. And by the way, for Mish's outlook, make sure you check out marketgauge.com. Should be up there, but we'll talk a little bit more about that towards the end. But I just want to make sure that I mentioned to everybody that it is free and available to download. But in your outlook, you talked about how the Fed is going to stick to the hard line. They're going to stay strong on fighting inflation. But when push comes to shove, I mean, if you have inflation that is still sticky, but you have growth that maybe starts to show some weakness, which way do you think the Fed's going to lean? Are they going to continue to fight inflation, or are they going to kind of try to support the economy a little bit?
That is the question, Blake. That's the most important question because, right, they came out. I mean, it was really actually kind of surprising by Powell. I think the most surprising thing that he said to me was that he thought that, A, he was going to sort of raise the post a little bit on terms of the inflation numbers, looking at a 2.5% as opposed to a 2% by the end of 2025. So it may be that he's focused on inflation a little too late because they've already lowered the rates by 1%. And some people feel that that was not necessarily a good thing to do. So, yeah. But, this is probably the most hated trade right now, which has been being long the yields and short the bonds. And as we can see, these yields are stubbornly high. So really what's going to happen, and yet, like you mentioned, manufacturing has shrunk. The labor market has softened. So it's going to come down to two things, I think, for 2025. And that's why I'm predicting a kind of a rough start. And let's get back to that because there's a
Yeah.
really good specific way for people to really understand what to do. But I put that on the shelf for now. There are going to be two major factors. Number one, of course, is going to be Trump, right? So we already know that Trump is headline crazy. He loves headlines. And he'll say outrageous things like, let's buy the Panama Canal back. We shouldn't have sold it. Like that's the most latest one that he just did. But then you have to say, is that really Trump? Or is that Trump getting people to pay attention so he can negotiate some kind of, I don't know, whatever better deal he thinks has to come out of the Panama Canal, whether lower fees or whatever, that's kind of been his thing. And that's one example. So we're going to see a lot of that, which means we're going to see a lot of volatility, but it's going to come down to, will he cut corporate taxes and will that stimulate growth in America? Will the immigration deportation be to the point that he's promising, or will it be more for show, which every president has done, by the way, including, Obama deported a lot of immigrants as well. Will he actually, in terms of tariffs, go as strong as he's talking, considering Musk is doing a lot of business in China with Tesla? And, can he actually really stimulate this sort of made in America thing? And what does that mean for government spending and inflation? And of course, the geopolitics, that's a whole other thing, which he thinks he'll have control of, but we don't know. So these are all unknowns, right? We need a much more mild-mannered Trump, I think, to keep the market steady. So this is where the Fed comes in. What Powell didn't say was that he wasn't data dependent. He always has said, I'm data dependent. He didn't say that this time. And I think that's really what spooked the market. I'm fixated on inflation and who cares about the economy? It's strong, but we know that can change. So that's why a Fed pivot could happen.
Okay.
And this
Oh,
all
I'm sorry.
gets kind of tied in. Oh, I'm sorry, Blake, go ahead.
No, I didn't want mean to interrupt, but when you're talking about your 2025 outlook and you talk about the snake, and I want you to explain what you mean by that. It's going to be a rough start. Everybody has these high hopes as they come in with the new Trump administration, but we just saw it as they were trying to get the funding deal across the line, so we averted a government shutdown. There's a lot of Republicans, old Republicans, that didn't vote alongside Donald Trump. And I wonder if that's going to be an issue, and maybe that plays into some of your 2025 outlook. But explain to us what you mean by the number 5 and how the snake works into your 2025 outlook.
Okay. By the way, in terms of the debt ceiling, I mean, there's a classic example of what Trump are we going to see? Because the Republicans are very worried about their own constituents. Really, this is always about what's going to get me the most votes and keep me in office. And so that's why I'm hoping that Trump realizes that his outrageous hardline stance on anything may not necessarily get the support, so he needs to moderate. So I just wanted to mention that. And there's another classic example. So there you go. And this is an unknown. But getting back to what we do know about 2025 is that there are 2 really interesting things. Number 1 is that the number 5, and Jeffrey Hirsch's dad wrote this book years ago, in the last 13 to 14 decades with the mid-year 5, going back to 1885, has been an up year. Only year that did not have an up year was 2015, right? So essentially, from a statistical standpoint, and we've mentioned statisticians and we know that stats can change, but from a statistical standpoint, this should be an up year. However, Case-Shiller is predicting a minor growth in terms of the stock market, like 3 to 4%. And I think that makes sense because now let's bring in Year of the Snake, right? So I have been following Chinese astrology in terms of the different animal totems every year. For years, I have found this guy named Raymond Lowe, and I just think he is amazing. He's a master, and I read his stuff with a fine-tooth comb to pull out what I think resonates. And what really resonated was with the number 5, and we know in the Chinese calendar, it's every 60 years, right? So 1965 was the last year of the yin wood dragon. So it's not just a dragon, it's yin or yang, and then it's also the different elements. So it's wood. And what he says is that in 1965, we had exactly what happened. It started out rough, but it had marginal gains. So I think that makes sense, especially when you put it with the Case-Shiller, right? So it all kind of fits. So if you come in with that mindset into 2025, I think you will, A, have much more realistic expectation, but B, that doesn't mean there won't be pockets that can do very well and outperform.
Well, that brings me to another point that I picked up when I was reading through your review. You really suggest, and I agree with this wholeheartedly. And let me ask the question first of all, or make the point. You talk about it being a stock pickers market, but I'm also in the camp that I believe that all these passive funds and everybody just index investing, if you will. I think it's going to be a little bit more difficult. And it seems like this is exactly the point that you're trying to make in your 2025 outlook.
Right, and I do cover the economic modern family, which I know you guys are certainly familiar with. Dale always
Yes.
asks about it. And if you look at them right now, transportation sent the warning before the market even sold off. It started selling off IYT, that's the ETF I like to use. And then, of course, RSP, which is the equally weighted S&P, that started selling off along with transportation. And we have to look at the small caps because we had a high of around 245 in 2021. And now in 2024, we take that out. Okay, phew, yeah. But if we don't and we really start to melt down, we're talking about a massive double top that could take a real, maybe more than a Fed pivot to recover from, right? So that's why the index funds and even the SPY, I mean, I think it can limp along with minor gains. So it could definitely be a wake-up call to a lot of these passive funds. And so we'll see what happens. And that's why you really have to keep your eye on the bonds too. Let's not forget those bonds.
So okay, we're going to keep an eye on the bond market, but you also made a point that you wanted to talk about the Mag 7. A lot of these technology stocks are starting to show some signs of weakness. What's your take there on the Mag 7?
Well, again, I think they could be impacted, although they don't seem to have the same sensitivity to interest rates, to inflation. Obviously, they've been like almost the safety play over the course of the last several years. So it's going to really, I think, come down to the first quarter earnings and what happens there. And if the earnings miss expectations, that could really be disastrous, and that will bring down the whole market. If it doesn't, if they actually can manage to continue to show growth, and we know that, NVIDIA, they can't even, they can keep chips on the shelf, so to speak, long enough. They sell out before they even, hit the market. It could still be good, but, we've seen some stress, right, in some of the other tech companies. But Mag 7, so we got Tesla, we got Alphabet, we've got Amazon, we've got Apple. Did I say Apple already? And Meta. The growth area in terms of quantum computing, in terms of AI, more software than hardware. I think we can maybe see some separation, which is why some of my top picks included that area. But in terms of the Mag 7 itself, they outperformed by 33%, where the rest of the 493 unmagnificent really only grew about 3%. That is not sustainable, in my opinion.
Right. Okay. Well, so the question is, is there going to be some rotation as we get into next year? Now, before I want to ask, before we kind of wrap things up, I wanted to ask you about, it's going to be a tumultuous or rather messy beginning of the year. But what are you going to be looking for as we get into 2025 that will guide you whether we're going to be more bullish or maybe we start to see a little bit of a retracement of this epic move that we've seen from beginning to end in 2024?
Well, we know that you can't discount the, race for the exits in everything, no matter how bullish something may appear, right? That happens, you get a liquidity crunch, and that's the end of that. But what I do love this year is the word regardless. So I'm looking at what could do well regardless. And I'm definitely seeing a trend, and I've been so on top of this, Blake, and I've talked to Dale about this a lot too this year, is the vanity trade or the consumer switching from the we spending to the me spending. And so this is really, of course, based a lot on the diet drugs, but I think it's a trend anyway. So that's one thing I think can do well regardless. Ulta Beauty held up really well the day we dropped 1,100 points. Some of the other companies like e.l.f. Yeah, the actual drug companies themselves are sort of waffling with headlines. Novo Nordisk had a horrible week last week, but Eli Lilly did well. So I'm still looking in that area and the trickle effect to that. And then I also really do believe in terms of the Made in America, I really am interested. I know people, this is so controversial, think the EVs are just going to crash more next year, but I'm not so sure. They've made a lot of big changes and there's a lot of mergers going on. I'm still looking at the EVs possibly doing better as people will switch to EV cars. Even Musk thinks that. And I'm also looking at, like we talked about, some in defense, more from the AI quantum physics side. Kratos was a company that I thought looked really interesting, but there's a bunch of stocks there. I think the metals, I still think you have to be long silver and gold. So these are the regardless plays that I'm looking at for now, and it could broaden if the market doesn't necessarily misbehave.
Well, before I ask, you and you can tell everybody how to get your research piece. I'm a currency guy, Mish. So I got to ask you, how do you feel about the dollar? I mean, if you think precious metals are going higher, are you bearish the dollar because it's had a hell of a at least end of 2024.
Right. Well, this is where I mean, one thing I will say about my outlook is that it's different than other outlooks. It's completely different because I am a technical trader and a fundamental trader. So as that hybrid, I'm really linking what to look for in terms of the numbers as well as the headlines that may drive that, right? So it's the old chicken or egg thing. So I just wanted to mention that. And that's the dollar, brings me to the dollar. If the dollar closes out December under 108, I think that tells us that we could see a declining dollar. And that, of course, just like you said, could be an interesting reason why silver, which has been sitting there above $27 an ounce, gold, which has been sitting there above $2,600 an ounce, still pretty high prices, could actually make a move higher, not just from a flight to safety with gold, but also somewhat of a maybe inflation protection if the dollar actually falls. That would be 2 out of 3 of my inflation trifecta. You still have to keep your eyes on sugar as well.
All right. Well, Mish, could you tell all the traders that are listening in right now, how do they get your research piece?
Well, we're going to post it on the homepage of marketgauge.com. And so you will simply have to put in your email. It's free and you'll get it. But I'll also be posting it on social media, on LinkedIn and on X. And my handle there is @MarketMinute. I want to make sure it gets into the hands of people. That's why I spent a lot of time doing this and also why we're offering it for free. So we want it to be a good guide for people to have by their desk and refer to. I use monthly charts, so we have a pretty far out look.
Well, Mish, I want to say it's always a pleasure meeting with you. And if you enjoyed this video and you enjoyed this interview, make sure you give Mish a big thumbs up down below. Subscribe to the channel so you don't miss any of these interviews. And jump in the comments. Once you read, Mish's outlook, jump in the comments below. And if you have any questions for her, ask them there. So, Mish, I want to thank you so much for spending your time with me. And us here at Trader Summit. Happy holidays to you and your family. And I look forward to catching up with you in the beginning of 2025.
Definitely. And happy holidays to you and to your viewers. Thank you so much for a fantastic several years together. I really appreciate your support.
Same here.